Hey, what is up, everybody? Hope everyone had a good day today. Today, I'm going to be covering some economical data, something I don't really do on the channel, but I thought you guys would be interested in it, and just kind of switch it up a little bit from just trading, which still relates to trading, but more about the economical picture. As tomorrow we do have the JP meeting, FOMC, where Jerome Powell speaks based on what's going to be, whether there's cuts, or there's not going to be cuts on interest rates. So yeah. Now to start off, guys, by the way, this is not financial advice. I do my own due diligence, and sometimes I may be wrong, and I'm still learning along the way. So take this with a grain of salt. And but yeah, so a couple days ago, I did compare Bitcoin to Solana and the S&P 500, which I will be showing you guys here, which I use Evernote for my note taking now. So I'm not going to pull up the chart on TradingView again just because I don't want to mess with it, but I will be showing you guys this. So here, this blue right here is Bitcoin. The white is the S&P 500, and the light bluish is Solana, which I'm currently invested in right now. So based on the charts above, we can see that when Bitcoin rallied in 2021, which are like these squares here, 2022, I should have added 2023 because 2024 we're still in that year. The SPY ETF also and Solana cryptocurrency rallied together, as you guys can see. So back here in September 2022, as Bitcoin rise, so did the S&P. So there's a correlation between that, and this is past data. So during the COVID-19 pandemic of 2020, the government did flood the economy with stimulus checks, which is why, in the first place, we're in this huge situation right now with interest rates. There was a lot of layoffs. There's stimulus checks going out, which flooded the economy with money, and so there was a huge sum of supply, which kind of caused this whole thing. And which in later 2022, the government rose interest rates to battle a huge money supply, which is what they can do. Basic macroeconomics, which caused a whole stimulus check situation. Now, fast tracking to 2024, what can we see? Well, prices are insane right now. Inflation is crazy right now. It's not as crazy as it was, but still the same goal of I think 2% or 3% is the target. And so what we're seeing here is a lot of the market has shifted its attention to the rate cuts, which has shifted the entire market. We're in a bull market now. As you guys can see that with the stock market, cryptocurrencies, all of that. And so this is kind of where we are now. So looking at the past data, as Bitcoin rise, so did the other follow. Same thing here. Solana has somewhat been stagnant, hasn't really moved a lot. But it has been rising somewhat as Bitcoin and the S&P have. So I find this very, very interesting. And with that, we also have the Bitcoin halving, which is coming in April 20th, 2024. So there's a lot of projections that Bitcoin is expected to break 100,000, which I do see it is capable, and especially now with the ETF now that ECC approves. Or the SEC that approve, right? So that's been adding a lot of institutional attention, which has gained a lot of traction within the market. So that's just kind of what I covered within this, but just a little bit more detail. So now, what kind of are my projections? So once again, if we look at this past data here, which I will be showing you guys, the CPI, which is the Consumer Price Index. The Fed is looking at the core, so excluding price and energy, but I'm still going to be looking at this. Just it gives us an idea, right? So it came in at 3.2%. Forecast is 3.1%. This is pretty recent, so about a week. So that was the forecast. Came in higher than expected, and this is something that the Federal Reserve uses to kind of base decisions upon, right? Not just this, but we also have unemployment rate, right, or unemployment claims, whatever it be. And it came in higher than expected. So as you can see, 3.9%, which does show that the economy is in pressure, right? That's the goal of the Federal Reserve, is to increase rates. Yes, there's trade-offs that come with that. People are getting laid off. People are not in jobs. So that shows to the Fed that there is pressure being applied, right? And then, of course, we have the PPI, which came in at 1.6, higher than expected. But those are just some indicators to look at. Of course, you got the PCE index and all those. So But now, as far as like Bitcoin goes, where do we think, or I think this will be at? So once again, it's not financial advice, but based on what I'm seeing here is, I mean, we hit the all-time highs now of 73,000, which is absolutely crazy, and we pulled back, right? So it's totally fine. There's just even in the bull run, you're going to pull back. You're going to see pullbacks 15%, 20%, which has been shown in the past. So I think based off this, just the 4 minute here, or 4 hours, sorry, I definitely think that with the data tomorrow that comes out with FOMC, that will kind of determine where the market's going to go. Ideally, either what we can see is we can bounce from this area and go higher, or what we can see is take out liquidity from people who bought high, which are probably selling right now as well. They're in pain because people bought high, not always a good thing to do, and they're in pain now. They're upside down underwater, right? So they might sell those positions, whatever it be. Or what we can see here is we hold this area, reject that area, and see that leg down, go back to the 48,000s before we even see a rally towards the upside and break the 73,000 mark. And that should be coming maybe around the halving area of April 20th, if that's correct. So that is kind of what I'm seeing here based off this data and past data, and depending on what we see tomorrow. So once again, I think that if we hold this area here at the 63s, we could bounce. So this is an if scenario. We could bounce, hold this area, and go back and break. I doubt that though, because right now this institution, so liquidity grabs. So what ideally I would like to see is we fail this and go for a leg down to the 48s before we even see any huge rallying, which is where the institutions would enter. So but yeah, that's kind of like my projections, guys. Hope you guys enjoyed this. A little different video, and I'm learning as I go with you guys. So see you guys in the next one.